Now, not everyone is as confident and optimistic about second half growth. Joining me now, Bart van Ark, Chief Economist at the Conference Board. Bart, good to have you.
Hi, Michelle. How are you?
Bart, let's first focus on the U.S. Now, you say that the U.S. consumer confidence and the U.S. CEO surveys are very optimistic, but that they're not necessarily substantiated by the facts.
Right. We have seen in the past couple of months that consumer confidence has actually been strengthening. Consumers becoming more optimistic, finally feel that the US economy is out of recession, even though it's already formally a long time ago. Also today, the Conference Board released the CEO Confidence Index. And again, we see, it's a slight slowdown, slight taper, but still clearly in an optimistic territory. And both these things are important because consumption is important from consumer confidence perspective and CEO confidence is important from an investment perspective. However, if you look at the reality, of course, you already mentioned the first quarter, 3% contraction of the economy. The second quarter, we probably see a sharp recovery, but it's just a recovery from the first quarter. And the question is whether there is an underlying strength in the economy that's going to continue in the second half of the year. Do you think there is this underlying strength? Well, we do think that there is a moderate improvement in consumption, so that improved consumer confidence will translate itself in more consumption, partly because the wealth effect is improving, housing prices and so on is helping the consumer. But incomes are still pretty weak and don't really increase very rapidly. Speaking of incomes, we just heard President Obama advocating raising the minimum wage. Would that be a good idea for the economy right now or not? Well, the question is if it really matters all that much. What we're going to see is we've seen this. It's going to increase costs. It's going to increase costs, but as a matter of increase spending. Yeah, but as a matter of fact, we already see quite a few services companies at the lower end beginning to increase their wages, partly to position themselves for what is going to be a tighter labor market. Because don't forget, we see unemployment coming down very quickly. It's now 6.1%. Only a few more percentage points. But is that the real rate of unemployment? We've also had the lowest rate of labor participation that we've seen in the market for a very long time as well. It's true that many people have left the labor market, but at the same time, the question is how quickly are these people going to come back into the labor market? Quite a few people have been out of it for a long time and will not come back very quickly. So wages will go up fairly quickly, and then the minimum wage doesn't really matter all that much. Still, overall, the Conference Board predicting GDP of 1.5% for 2014. The IMF has it at 2%. Why the divergence? Well, the simple fact is that the first quarter is already counted in. So a minus 3% contraction in the first quarter, we're predicting 3% for the remainder of the year. You just statistically end up at 1.5%. So we're just subtracting that? Yep, that's already happened, so we can't do too much about it. And 3% growth is quite decent growth. But don't forget, we're still recovering. We're still trying to reduce what we economists call the output gap. There's still a gap left in the economy. But going into 2015, we may have closed that gap. And then the question is, how much faster can we continue to grow? Let's focus on the global economy, your outlook for the other developing countries and the developed countries for the rest of the year. Well, first of all, the US is the best in the class of a pretty weak group of mature economies. So, Europe and Japan are growing significantly weaker. Europe is a very, very moderate growth. And at the moment, we actually see some more weakening rather than strengthening. Certainly, when you look, for example, at purchasing managers indexes, it doesn't really look very good for Europe. That negative ECB rate for the European Union, how is that going to impact things? You don't see that as having a significant boost? At the moment, the question is whether the rate is going to make all that much difference on the monetary side. What we really need to see also in Europe is more consumer confidence and more investment. And the question is whether that rate is translating itself quickly into more investment. It's really a shortage of demand. Let's talk about emerging markets very quickly, because you're pretty concerned about their recovery, but you do see India as a bit of a bright spot. Yeah, absolutely. In the short term, it does. India has a lot of what is called so-called low-hanging fruit of things that hadn't been done under the previous government. We now have a new government, and it has its famous first 100 days. And if it is using those 100 days very well, it could actually push through some of these reforms, for example, in labor markets. That could pay off fairly quickly, and also we'll see increased confidence very clearly among Indian consumers. So that will help for the remainder of this year. But there's a long haul ahead for India to get to faster growth. So all about Modi's change of business regulations and what he brings in terms of regulatory change to the economy. That's what's going to give India the boost there. In the short term, there's low-hanging fruit that can be fairly easily realized in reducing red tape, in getting rid of some of these business regulations. That will help in the short term. But in the longer term, India India will have to, recapture growth into the range of 5 to 6% or even 7%.
Which emerging market are you most concerned about right now?
Well, at the moment, we have to be generally very concerned about South America. Brazil, we have seen several months of worsening.
Not just on the soccer field.
Not just on the soccer field, absolutely not. I mean, it was well before that event that this happened. Although that will impact confidence, and if that comes on top of the already weak confidence, it's not a nice thing to have from any points of view. But Brazil really needs to begin to make massive investments in their economy and reforms. It will impact the political cycle probably quite significantly. So we have to be concerned about Brazil. And then, of course, China always remains a concern about whether they can accommodate that soft fall, as we call it in the economy, slowing the economy gradually down.
Even though economists independently saying they expect growth at 7.4%, that seems to be the general consensus?
Yeah, well, we have had it at 7% for quite a while. We think it's a bit optimistic to put it between 7.5 or some people even somewhat higher than that. And we have seen a very clear slowdown currently happening. But the uncertainty here is in the real estate sector. That's very volatile. That's perhaps going even a little bit faster, that unwinding, than is desirable from a point of view of the soft fall of the economy.
Right, lots of things to watch very closely. We know you'll keep an eye on it for us. Thank you so much, Chief Economist at the Conference Board, Bart van Ark.